What is up, everybody? This is Books of the Stock Market. I hope everyone is doing well. This is the Sunday report where I cover the top articles from Monday through Friday. At the end of each article, I'll be giving my thoughts on how the article could impact or has impacted the financial markets. Without further ado, let's get into this week's Sunday report. On Monday, economic growth data of the fourth quarter was released by China. It showed that there was economic recovery, but the gap between the rich and the poor has greatly increased. As with most countries, China went into lockdown when the coronavirus hit in January and February. This caused people to lose their jobs. However, when the country reopened, the jobs that were lost didn't come back. This was reflected in other economic data as retail sales fell 3.9%. I chose this article mainly because of this question: will the jobs that are lost ever come back? As many companies are noticing that they can still operate with less people, it should be really interesting to see if people will be getting their jobs back. Furthermore, if jobs don't come back, it will affect the financial markets. To what extent, I'm not sure, as the current stock market shows that it has separated from the general state of the economy. As you may know, Janet Yellen is Joe Biden's nominee to run the Treasury Department. On Monday, she said that she would tell the Senate Finance Committee that the government must act big. She believes that the stimulus plan will indeed be a burden for the future, but for now, interest rates are so low that the correct play is to act big and spend money. She also believes that the benefits of this plan will outweigh the costs. I mainly chose to bring up this article because I don't necessarily agree with Joe Biden nominating Janet Yellen. The main reason for this is that even though she's not currently working with the Fed, she was still the Fed chairman. I believe that there should be separation between the Fed and the government so the Fed doesn't become politically motivated, but now there's a direct connection between the Fed and the government, so that's pretty unfortunate. Also, she's basically saying that they're going to print their way out of the debt problem since the interest rates are so low. So the dollar is pretty dead for the foreseeable future. Let's wrap up Monday with what an analyst thinks about the upcoming earnings season. Credit Suisse's Jonathan Goldman predicts that this earnings season will be a bullish event. The main reason behind his bullishness is that banks who released their earnings last week show that overall they did beat expectations. He also believes that people are generally too pessimistic about the current situation. He believes that 2021 will be a spectacular year for the markets as vaccine rollouts will eventually be completed. There are a few things to take away from this. First, don't trust anyone on Wall Street. They probably have a reason for what they are saying, and it's probably not for your own good. Second, I think that banks beating expectation is a pretty good indicator, as it shows that money is still flowing and people are still spending. But for now, we have to wait and see how the market reacts to the upcoming earnings, as banks did beat earnings, but they did fall last week. On Tuesday, the only notable news event that happened was Janet Yellen's Treasury testimony. As mentioned a little bit before, Janet Yellen believes that it is important to provide stimulus right now than to worry about the debt problem. She believes that once coronavirus is gone, the benefits will outweigh the costs. She further stated that taxes on corporations will have to come up if they want to fund Biden's plans, such as transitioning the U.S. to a greener economy. However, she stated that taxes will only come up once the coronavirus has disappeared. The final notable point she mentioned was that she does not want a weaker dollar, but wants the markets to decide the strength of the dollar. Overall, I thought that nothing was out of the ordinary. The only point that may have been a bit surprising was Yellen saying that she will not raise taxes till the coronavirus has passed. Therefore, this means to buy any type of asset, as it is clear that there is going to be a lot of stimulus and the US government is willing to keep the financial markets propped up. Wrapping up the day, we had Netflix up 12% after hours on Tuesday. This was due to the fact that they added more customers than expected, but more importantly, they do not need to borrow any more money to fund their business. More than 200 million subscribers are on its services, and they have around $8.2 billion in cash. People believe that the increase in subscribers came from Netflix branching out to other countries such as Korea, Japan, Germany, and France. They further added that they're considering buybacks, which was very unusual as they haven't mentioned buybacks in over a decade. For the year of 2020, Netflix is up 67%. I chose to cover this article as the stock jumping 12% is always fascinating and makes you wonder why didn't I own the stock. All I can say it is too late, so don't FOMO into Netflix. On Wednesday, the dollar fell versus most currencies due to Biden's inauguration. Now that Biden is president, people have confirmation that there will be a lot of spending. Furthermore, there is no more risk of an event that could threaten the democracy of the United States. This caused the US dollar to fall against the yen. Additionally, the US dollar fell against currencies that are tied to commodities such as Australia, Canada, and New Zealand. For instance, the US dollar against the Canadian dollar fell to 3-year lows. Furthermore, the net short position on the dollar made recent highs as people were becoming very bearish on the dollar. On the other hand, the S&P 500 made new highs and closed the day 1.39% for the day. Overall, this further strengthens the idea that stocks only go up, and trying to time when the bubble bursts is a losing man's game. Wrapping up Wednesday, we had the European Central Bank come out saying that their monetary policy will remain unchanged. They are also willing to ease it even further if the second wave of COVID-19 is uncontrollable. This was pretty expected, as in some parts of Europe, new lockdowns were introduced, meaning that any negative change to the current monetary policy would reflect poorly on the financial markets. As if markets can't go any higher, we got confirmation that our European counterparts will also be keeping the markets propped up. Therefore, once again, for the near-term future, it seems as though the markets will continue to climb further, postponing the inevitable market top. On Thursday, the Department of Education extended student loan payments till the end of September. The pause of student loans was one of the 17 executive actions that Biden signed on Wednesday. This is good news, as many people cannot afford paying around $200 to $299 every month in these current conditions. However, people are still wondering if Biden will cancel the $10,000 of student loans he promised during his campaign trail. On the other hand, more progressive senators like Senator Elizabeth Warren want Biden to forgive $50,000 of student loans. Only time will tell how the Biden administration will tackle $1.5 trillion of student debt. This article is pretty significant as the pausing of student loan payments and eviction moratoriums were extended on Wednesday evening. One of the possible ways for the financial markets to crash is if people stop paying rent or defaulted on their student loans. This will cause a ripple effect as tenant owners will not be able to pay their mortgages, causing a possible housing crash. With this extension, the financial markets can continue climbing upwards. On Thursday evening, Bitcoin broke through the $30,000 level. This left Bitcoin down 12% for the week. Many people believe that this move downwards was due to Janet Yellen's testimony. Janet Yellen described cryptocurrencies in a negative light as she described them as being tools to launder money and conduct illicit activities. These remarks caused a quick spike downwards. Bitcoin continued to fall to the 30,000 level where it found support. However, this support did not hold and Bitcoin dropped below $30,000. By the end of the day, Bitcoin was slightly above $30,000. This was pretty significant as this week was one of the few weeks that Bitcoin was down a significant amount, as in previous months, Bitcoin was almost always positive for the week. This just shows that cryptocurrencies are much more volatile, so be careful when allocating your money into Bitcoin. On Friday, Boris Johnson said that the new coronavirus strain has a higher mortality rate than the original coronavirus. He also stated that this strain of coronavirus is more transmissible. Fortunately, he says that a vaccine is effective against this coronavirus strain. To put this into context, Chief Scientific Advisor Patrick Fallon said that the ordinary virus had 10 out of 1,000 men in their 60s die from the coronavirus. However, for this new strain, that number increased to 13 to 14 people. I believe that this article may be just noise as vaccines on the market seem to be effective against this strain. Since the markets usually price in future projections, it might be safe to say that this is just near-term noise and have no effect on the markets as everyone will eventually be vaccinated. Let's wrap up this week with a fun article. On Friday, GameStop was once up 69.4%. This was caused by a massive short squeeze as this stock is one of the most heavily shorted stocks in the stock market. Furthermore, this move upwards caused there to be multiple halts during the day. While this was happening, the trading volume of the day was up 8 times its 30-day trading volume average. Around 194 million shares were traded when usually only 23.8 million shares are exchanged in a day. This article is pretty funny as it shows that popular subreddit Wall Street Bets might have more say in a stock than research firms. It should be interesting how this plays out as both sides may be manipulating GME's price. So what are my thoughts on this week? The week started out pretty strong as Biden was successfully inaugurated without any significant threat. Stocks retracted a bit the rest of the week as the dollar rose briefly, but the dollar eventually fell back down. This week, the S&P 500 ended up around 1.55%. Well, that's it for me. If you liked this video, press the like button. If you have any questions, leave a comment below. If you don't want to miss out on future content, press the subscribe button. Thanks for tuning in, and I'll see everyone next week.